Hello, everyone, and welcome to week 5. So now it is indeed my part to show you a couple of examples. So what I will be doing is actually showing you an entire day example in depth on gold, as you can see over here, the 4th of gold. So what I will do, of course, is start in Asia and then build away the picture for the rest of the day. But mainly, most importantly, should I say, is understand the main target of the day. That's key to understand the overall direction. And then you can decipher what is a pullback trade and then what is your pro-trend trades. And this will help you identify then your targets. Are they very short-term targets being the pullbacks, or are they the targets that lead up to the main target? So if we start off the day, let me change my pen color first to black. Maybe that's a little better. So let's first see what our intraday target is based on the price action we currently have. So what we can see is we have Asia, as you can see in the purple box in front of us, and we have the previous day New York over here, as well as all these price action bits of lows, highs, creating these structure points. Now, I'm not interested in them as a structure point, but just, again, for argument's sake, just marking them up as an average. Now, the way we see this, well, we can see already these points here have been induced, where you could say the buys or the buy pressure has been induced by this reaction in Asia. However, we have the remaining highs intact. So this will be your yesterday's high. And then we have these other structure points in the way, not really having significance in that sense. It's end of day liquidity from this point. You can see it's around London close, around about there. Then we get this choppy price action in Asia, and then whatever, this little mess that goes on in the price action stage of buildups. So the question really is, what is our intraday target? Based on what I just mentioned, not a very strong reaction of sells from this point. Everything in between didn't really do much. As you can see, Asia already traded below that. So a lot of this liquidity has been taken out to the buy side. So these buyers are taken out. However, the sellers are not taken out. So what that likely means is we then have our yesterday's high as our main target of liquidity. Now, also what's key is it a reasonable target? Well, yes, because it's not very far off from where we currently are trading in Asia, let's say around there to there. It's a pretty decent range. Now, it doesn't look like much, to be fair, but again, we're waiting for some sort of pullback likely over here. Then ideally trade into there. Then we want to take our sells because our main target is now induced. So once it's induced, trade away from the inducement and then start taking out these lower levels of liquidity. Now, that is the ideal cycle we want to see when it comes to the daily cycle play. But what we must also do is ensure we have our confluences in play. So the question is price ready to continue bullish in line with our target? Now, this is key for understanding your build-up. So you need to mark up your build-up liquidity stages. If you remember them, that was your trend lines. That was your equal lows, equal highs, your breakout traders, your smart money traps too. So these are, you could say, random points of imbalances or mitigation zones as smart money traders would see it. So, and then of course, your Asia high and Asia low. That's pretty self-explanatory at this point. So if we mark them up, what we can see is we have a pretty good amount of targets. So we have Asia high right here. We also have the smart money trap right here. You can see this little mitigation point very close to Asia. It's in such a close range, we can likely expect that will be smoked. We're not sure if it gives a reaction yet or if it actually gets straight smoked as a smart money trap. An FFS. Then we also have our build-up phases. We have a build-up of liquidity above the smart money trap, which also helps us understand why this is an invalid zone, as we still have liquidity to the high side. Now, another key factor that can help us identify why Asia low may not necessarily get induced in this case is because of this 5M leg. Now, it is a 5M chart. Hopefully you noticed that up there. Should have mentioned it, but yeah, you should see that at this point. I always start off mainly on the 5M in these examples. So the 5M let usually helps us identify direction when it comes to an Asia inducement. Now you have to backtest this as well. Don't just take my word for it, backtest it. But you will see that the 5M let does have significance when it comes to the direction of where price may trade into Frankfurt or London Open as the first target of the day usually. So in this case, what we can see, if we just mark up this liquidity, whatever these trend line bits there, lows, and then this random structure point there, we even have a fractal buildup over there. What is this? An inducement, but they are vector candles within the inducement. Then we get our 5M let after we break these relevant structure levels. Price reverses, perfect mitigation, and then price has given a very lovely reaction at this point where we currently are trading. Now, that doesn't mean to say, of course, this isn't valid Asian mitigation, we should be trading it, but it's for the understanding purposes. If we get a 5M let, not a 1M, it has to be a 5M, you may indeed expect price to then continue into the direction of the main target. Now, again, what's key to understand is this lines up with our target, which we marked up first. Our main target is the first thing we need to mark up. Then we need to mark up our liquidity levels. And only then I use the entry helper right at the end to help confirm direction in the beginning of the day. So let me clear those drawings. So I guess the next thing is let's see what price action will present us. So let's see the reaction. Okay, so price has indeed continued bullish, as you can see from here. London open window doesn't look very nice, be very honest, very low liquidity, very low volatility as well. And indeed, this was actually a smart money FFS reaction, sorry. As you can see, price did indeed choop straight through it, gave no reaction. So it's an FFS. So this is nice because it helps us build our direction. So what we can currently see is indeed price does continue bullish, as we did mention, likely from the 5M letdown here. So what happens is the smart money trap does indeed cause a FFS in this case. As you can see, it did smoke through the zone over here, didn't give a reaction. Unfortunately, London did give a not so volatile reaction. It kind of stayed within the range of this smart money trap zone, likely inducing smart money traders to take sells. They get probably mad and then want to take more sells. Equally, we could see this as a double top of liquidity. So again, taking in account of your resistance traders. So it's all a buildup of liquidity. That doesn't mean we're necessarily finding an entry here. So as you can see, the 5M let did cause the reaction of such, where we had the 5M let after the inducement over here for price to continue bullish, likely in line with our main target, which is ever so slightly above at this point. What we can see currently is that price has had a reaction of structure to the left over here. So it's reacting within this structure point over here of New York the previous day. It's given a very strong reaction of a wick. Again, this is on 5M, so can't see too much over here. But what we will do is go on the 1M chart soon to see exactly what's going on and see potential entries. But let's first understand this a little better. So we can likely refine on the 1M timeframe to identify pullback trades within this fractal inducement cycle. Now, remember what I mentioned, that our main target is indeed here. We haven't reached there yet. Maybe we get a pullback, which we can trade only with the confluences aligning, identify a target, also close the trade, take the continuation trade, which should likely present an entry, and then only until we reach the target up here to the left, then we may also get the same cycle, but now this becomes the pro trend trade. Now, why does it become the pro trend trade? Is because price has then induced the main target, we can reverse. So this is an entire day example and how you can get multiple main targets of the day. Well, mainly two, I would say, where price is continuing, let's just say bullish or bearish, and then the target's complete. Now, because it's complete, you're taking the main trade of the day, which is against the inducement. So right now, this is essentially trading into the inducement. But let's likely see if there is an entry opportunity, maybe on a pullback of this structure point. So let's clear things up a little bit. Now, what can we see? 5M chart is over here, but let's just see what the 1M chart does present us. So on the 1M, we can see the London box of liquidity at this point. We have these perfect equal lows over here. We have vector candles. Now, this was that reaction we were talking about off the wick over here. So we get perfect vector candles. We have a very nice mitigation POI actually over here. Again, it's a fractal inducement because it's a pullback and not necessarily a pro-trend trade. Hence why I mentioned fractal. Then what we also have, which is very key, I would say, in pullback trades, is Elliott-Hopper confirmation. And what that would be in this case is potential let opportunity, because the price did cross over. Upon completing this pullback over here, we may indeed get a let. However, everything else does align from the build-up inducement mitigation aspect. We didn't get a relevant break of structure just yet. That would be indeed over here. Maybe also a smart money trap, but the relevant structure would be having to break that point there upon reversal. I'm not too keen on that just yet, as I can already see price may just reverse. I do like taking it as such without relevant breaks of structure. You don't need to use it. I personally don't like using it too much unless it does appear, of course. So let's clear things up a little bit and see what price action will show us. Now let's see the reaction, what it gives us first. Perfect. So we get our 1M let. As you can see over here, perfect 1M let. Reaction's a little bit messy, I'll be honest. It's a bit of a choppy reaction. Nevertheless, it did hit our target over here as a pullback trade. Now, target-wise, we do have equal lows as our first target. However, what we also have as our main targets is a pullback, actually. So we have our pullback target of the POI with the imbalance over here. Why is that a target? Well, it's just a generic target for price to fill in these imbalances. If it breaks the low here, that's completely fine too. I don't really, should I say, care in the sense of if it reacts there or not. To me, it's a target within this little purple box of a zone. Within this area, I want to take profit essentially in there. So we have is also almost MM1 for when we had our let. I would say it's just ever so slightly off, maybe that's like 5 or 6 minutes. Still very valid. So it's an MMM reaction or MM11, which is 10:30 a.m. UTC plus 2. We have the 1M let after the inducement, after the buildups of liquidity. Now what's happening is we're getting more buildup, which gives us the intention that price will continue to take out this as well as this, and then continue maybe into our POI. What's also key is when it comes to risk to reward wise, stop loss will be just above this high. It's pretty decent. Entry is here, pretty decent. Risk to reward, I can't magically guess right now, but that will probably be maybe a 1 to 10, and that's pretty decent for a pullback trade. And the only reason why you would take a pullback trade if there is actually reason in the sense, is it worth risking your money to take the pullback when it comes to a target? So target-wise, it makes sense. It ticks all the boxes. So let's clear that up. Now, what another question here we have is, before we continue, is there potential for a second entry? Now, you're probably thinking, where would that be? Now, let's probably zoom in a little bit better. Maybe it will help us. So we can already see the 1M let. So that's just a mirror image of this reaction here, just zoomed in a little better. So a consecutive mitigation POI with potential for another let. So this is why it's key to mark up your buildups, and then you will identify this much easier. Maybe you didn't see over here. Oh, that was a bit wrong. Let's do that again. Around here in this area, what we see currently. So when you zoom in, it's a little bit easier. We've got another mitigation over here after having this trend line type of pullback. It is also equal highs or whatever you want to call that over there, but nevertheless, it's liquidity. leading into potential POI again. And what's really, really key is the potential for another lead over here, which looks really, really nice, as we haven't had the pullback yet. So when the pullback forms, maybe that's what causes the line to then tap. So characteristics look really, really juicy over here. And let's just see what price shows us. Perfect. So we get a 1M lead. Looks ever so slightly off. Nevertheless, it basically did its job at that point. Either way, you should, if you take it in real time, be tagged in based on spread. You will take it a little bit less off anyways. Nevertheless, what is the reaction it gave? A very lovely one. It induced the structure points. Smart money trap, or is that an FFS? That's an interesting one. It technically is an FFS, it broke through ever so slightly, but arguably you could say it's somewhat of a smart money trap with that reaction over there. However, 2 perfect entries on a pullback. Now remember, pullback trades don't always look this nice, so avoid them if you don't find them clear like this. Make sure they're basically like this, with the whole lit cycle in making sense and with a very clear target worthy of risk to reward. So at this point, price is actually away through pips from the target POI. You can see we are there creating this fractal lows, and the imbalance is just ever so slightly low over here. However, what's another important timing factor is, you can't see it properly here, but we have MM2 coming, or MNM2 coming, and that's 1230 UTC plus 2, which you should at this point have that remembered. You're on week 5 content, so you should have that deep in your brain. So as we are approaching that, maybe we get the characteristics we want of the vectors inducing low and then tapping into this area, but we'll see what happens. But timing likely may play a role to create cause, essentially, and then we can understand whether to then take our profit. So let's see what happens. So if we do get a MM2 reversal, we must build this COE, which is your confluence of events. So can we identify a fractal buildup? Yes, we can identify a fractal buildup. As you can see here, we marked up the liquidity both to the low side as well as the high side. What can we then wait for right now? Well, we have an inducement. So we have an inducement. We have this slight vector candle. Now it is a 1M price action, so it's not going to look the clearest generally. However, we have had an inducement of this perfect lows over here. Now it's a matter of, well, could price possibly come back here? Well, maybe it could. Now this is where your relevant breaks of structure will help you, because it did break these relevant structure points over here, which led to the inducement. Price is now trading there. So at this point, we can detect reversal characteristics that price is now essentially reversing in this case, and maybe to then take TP after this point, because we're seeing a whole new cycle form. Now, what we also can see is a mitigation. This is where it's key, because now this becomes what? The pro trend of our trades. So these are pullback trades. You take it and then you close it. Pro trend, we take the mitigation and we want to expect price to break through, 100% break this structure point at that level. It's not really like a structure point of any validity, it's just a pullback. That's why we don't really care what it is. On the way, we induce these liquidity points here, like such, smart money trap or FFS. And then, yeah, we've got a very nice build-up appearing too. So let's see what happens. So we get a mitigation, lovely. Entry help was not very nice on that one. Could have been a let, don't get me wrong. So that high is also this high. Could have been a let. I would say it's very choppy. As you can see, price did react. Not the nicest, but nevertheless, cycle-wise, it's all there. So let's see. With the characteristics of this fractal cycle, we can likely expect price to continue bullish from here, as enough liquidity has been induced upon a fractal scale. Remember, price will gravitate towards liquidity over POIs. So that's key in understanding why this POI didn't necessarily mitigate, because the target has already been complete. It's created enough liquidity that now it's enough that price can continue. And this is why we don't necessarily choose random POIs. This was just for an argument's sake of actually a target, but not not a target to buy, but a target to actually close our profits. So that's very key. And let's see what price does. It's almost MM2. We have let potential for a second POI. This is very nice. So just like the first one, we get two very nice entries. Now we get an entry that's probably even cleaner, where we actually get, again, let potential. You can see it's crossing over. It's there right now. Upon pullback, maybe we also get the pullback where it forms now a let. And it's almost magic manipulation minutes too. So this trade in itself, the second one, would be far more nicer in that sense than the first initial mitigation. And this is why if you're not confident to take the initial mitigations, wait for the entry helper confirmations, whether that's the EDMs or the lets. So let's see how price then reacts. Lovely. So we get actually a perfect let. I don't think that could be more perfect where it taps on the line. That's lovely. Price has given a very nice reaction. So you would be at break even. I would say that's 1 minute off to the minute of MMM2. So that's actually a perfect timing based reaction. And what's lovely is how the timing actually helps the volatility help price to then intentionally move. Now it has actually induced this structure point from what we can see. Now we just want to wait and for price to then continue. Now let's see if our smart money trap does indeed get trapped or does it become a POI? Let's see what happens. So remember our intraday target, we should look to take out everything to the left. The sells are pullback trades. So hopefully you didn't get confused when I mentioned POI because I knew it was not a POI. I mentioned that, so it's not a POI. It's a smart money trap. So smart money traders enter positions at this zone, which gives an ideal reaction, right? So it gives a perfect pinpoint entry right there. But what price does, remember, we have a main target for the day, still higher up. Buys are then pro-trend. So let's see the 1M chart, what it looks like as an overview. So if we see from here in a smaller, say, picture, this is the 1M chart. We are currently trading over here, the 1M price action. Now let's include the 5M chart. That is this mirror image over here. Where are we currently? It looks like this. So 5M price action is here, and this is the 1M price action. So this is why using the 5M alongside the 1M on intraday is so key, because maybe on the 1M you get lost and think, okay, the sales look pro-trend, it's order flow entry number 3 at this stage. But then when you look at the 5M, it really doesn't make sense. You can see that price have made this pullback here. You'll know that this is going to be a smart money trap over there. Target is ever so slightly close. We still have, remember, these liquidity levels, these structure liquidity levels over there to the left in such a close proximity that price likely will induce, and the smart money trap is inevitable where it will induce traders to take the sells. So let's clear the drawings. Now we shall go back to the 1M chart. If we look at the 1M chart like such, could we identify another buy opportunity using the lit cycle? That was key. We've already got 2, but maybe we get another one. Let's see what price does. So firstly, the question is, what even is your POIs when it comes to, well, we're going to minus this one because this is already now mitigated. So everything between here and since price is there, it would have to be around there. So between these structure points, is there anything now, what I would say, a POI with significance? So we can see 2 POIs that are basically with imbalances. Now it's the question of which one is more significant than the other. So we have 2 POIs marked here, both with imbalance. We will identify significance based on what the push led to. And this is very key in understanding the significance, is what did each push lead to. So now if we mark up with 2 red dots or pink dots, whatever you want to call that, the first one led to this high. But what is that high? It's equal highs. So the first POI led to equal highs over here. So it actually led to more liquidity. The second one, on the other hand, actually induced these highs over here as it made, you could say, a new high. I'm not trying to implement some retail structure stuff here with highs, lows, but I'm talking generically when it comes to seeing the price action with these dots, maybe it helps you see the significance. So what we have, zone 1, which is this one here, it breaks above the liquidity level like such. Let's clear drawings. So Pier 1 serves a cause in breaking above the liquidity and equal high formation that POI formulated in conjunction with the buildup. So POI 2 basically formed a buildup, and then POI 1 induced the buildup. So what does that mean? POI becomes our significant zone for taking buys, essentially. So let's see. POI 1 is our main POI. Let's mark that one up clearly. Let's mark that one up clearly. Can we identify a fractal build-up target to be induced into our POI? Well, technically, yes. We have, again, the trend line formations. So key to have this in your eyes, but we have 1, 2, 3, and that's where trend traders fail because now price is breaking below that. Even those lows, if you can see there, equally, support traders, they'll take buys from here. So let's see what happens. Perfect. POI reaction takes out the liquidity. Vector candles, as you can see. So they induce into our POI over here, as you can see. Now it's a matter of, well, maybe we can take the consecutive mitigation after. Now, I'm very key or big on taking those. I love taking the mitigations after an initial POI if I'm not necessarily confident if the POI will sustain, or if, say, price breaks ever so slightly below. I actually prefer to wait and then take the mitigation. Now, here it's very clear that we've got an entire cycle, but this is our, you could say, number 1, the build-up stage, 2, the inducement. Now, the only thing is 3 is after the inducement is the mitigation. So that can only be this. This is not number 3. So important to understand when it comes to a POI to the left, you're not actually necessarily completing a cycle when it comes to fractal liquidity. You are just, identifying a POI with significance, and then your real mitigation after the inducement is, like I said, after the inducement and not before that. So key to understand, this is not a 3. This is your last stage. If it occurs, it doesn't always occur, that's fine. So we could take the consecutive mitigation as such, and now we can see the outcome of what will happen in a few seconds. Let's see right now. So you can see, lovely. We even entered New York at this point. We have an inducement high, which is lovely. If you remember this structure point here, I'm going to try to be as straight as somewhat possible. So it's somewhat equal highs with this very first reaction. Price obviously will give a pullback for those resistance traders. So that's resistance, liquidity, or whatever, equal highs type of liquidity. They get induced because they want to enter here now. You can see they're still trying to enter. They get induced again. So yeah, seeing the build-up is really key of understanding not to take things like such, and how that's your resistance traders entering the market on a third touch over here. What we get after this so-called third touch is these lovely vector candles as such. Inducement high. Doesn't sustain because, again, timing's not significant. So we're going to see these cycles play again and again. It's just important to wait for the relevant ones. And this is why trading the cup trades are so key. And this is why you want to wait for your timing-based cup trades, which is London and New York, and not just take these random trades. Because if you take, say, this mitigation, it does give you a reaction, but it doesn't sustain. It just takes out these fractal liquidity levels, these traps over here, inducement low, price continues to now take out these levels over here, and cancels out these early sellers, you could say, that trade the typical London Open, which is 2 o'clock UTC plus 2. So this is why we wait. And what we can see already, even in New York, is the same cycle, but with far clearer vector candles with more significance. Price has trooped really nicely. It takes out this fractal liquidity over there of sellers. So that is very lovely. Now, the question is here, is, did we reach the inducement target of yesterday's high? Now, if you remember, we are on the 1M, as you can see, so it's a little bit tricky, and this is why we need to continuously change between the 5M and 1M to see exactly where we are and not get lost in trades. So let's see on the 5M chart for an overview. So this is a 5M. That was your New York Open inducement. I mean, it's pretty juicy of how it's reacted ever so slightly. It doesn't need to go crazy high, but look how beautiful that is. It induces perfectly in New York Open. I don't think it could be more clear, but that is lovely of how that has occurred. So now price has reached the target. We can look to take sells using the lit cycle. So let's see a little bit on the 1M, what that looks like. So we can see the 1M zoomed in of New York over here. Again, you saw this before of the effect candles here. Perfect. I mean, it's pretty self-explanatory what's going to happen next. Let's just make room for that. So we've got the 1M chart back. I mean, it's build-up, inducement, and mitigation. So, of course, it's self-explanatory. Your entry becomes the mitigation. And this is an absolutely lovely one because we get such a nice reaction bearish. We get the relevant breaks of structure over here. It's in New York. What else could there be at this point when it comes to an entry? Maybe a let. I'm not going to keep my hopes up on that one. Maybe a let. The only reason I'm not too concerned with it is because let me just clear that. The distance between this line is not too crazy. However, the distance between this line is too crazy. So yeah, I'm not too keen. However, I'm happy with the overall cycle play. So let's see if and where price may pull back in order to take the sells. So what do we mean? Well, we wait for a little bit more for reaction. What did price do? It takes out liquidity over there. What does that mean? Okay, we get also a fractal inducement. We get the vector candles like such. Build up, stage number 1. Inducement, stage number 2. We're getting a very nice reaction from that. And then what would it be? Let's look to identify potential reaction points. So you can see what I'm doing here is identifying pullback trades into our POI. So what's lovely about this is we can potentially take a mitigation in here to take the buy, to then take the sell, close your buys, of course, and then take the sells like such. And that's how you can play ping pong. So let's see what price shows. And remember, earlier, the POI with the imbalance that failed to initially mitigate. Now remember that, keep that one in your mind. It looks like such over here. So you can see, where did the pullback happen? This pullback, not only did it induce liquidity, now it actually taps into this as you could say a smart money trap because, yeah, it's reacting. It's a smart money trap, not an inducement. Like I said, I wasn't too concerned with if it reacts or if it doesn't react. It was actually more of a target, I believe, down here. It was more of a target. Well, I'm marking up a mitigation, but it's more of a target for these sells to maybe tap or induce. And then, yeah, I close because then I'm expecting that a cycle is now complete. However, the cycle can already be incomplete once it's made a fractal liquidity like such over there. And then these little inducements, relevant breaks of structure, reaction, mitigation, and then price troops. So you can see that's lovely how New York gives that illusion. And this is where maybe yourself or maybe, well, 100% smart money traders would then probably take the sells and the buys all confused and, yeah, not knowing what to do. Like, oh, no, it's like hit my POI perfectly. For me, I don't really care. It's more, can I trade the pullback? So let's see. That's what it looks like on the deeper version over here on the 1M. So we're building the picture from here to the left. So the perfect reaction. Back to this price action point. So we've got this big chart in our eyes. We can see what's happened there. We don't need it anymore. So let's see what price then shows us. So we've got a lovely reaction. Price has reacted here. Now we're not going to get a relevant break of structure to the high side to take this buy. I mean, it's pretty obvious the price action is not suggesting anything. Remember, it's a pullback anyways. You're not going to expect crazy confluences as it is the opposite trade, whereas the pro trend trade here did give the relevant breaks of structure there. So let's just clear that up a little bit. And also have our lovely purple mitigation box ready for us. So, lovely reaction there. As you can see, perfect mitigation. Now, this is why you don't use an entry helper with like no confluence, assuming, oh, it's a let there, it's a perfect let. Maybe it mitigated this. Like, I mean, now we're just making up stuff because I just seen that on Edge. But this is why you don't use it. You only use it in combination with a mitigation that's already marked up based on a cycle you've already marked up. So that's why it's really key you understand this. So let's see the reaction it gives us. Lovely. Let's get rid of that drawing over there. They're all drawings, so it gives a nice reaction in terms of a pullback. It's pretty nice, I would say. But do you notice something here? Now, keep your eyes out. I'll give you a few seconds. Can you see something on the chart? Use everything you can see. Do you notice something there? Possibly a re-entry. What would that be? Let's see. Let's point towards something that's key over here. What do you see? Now, at this point, you should know. I shouldn't be telling you. But we can see a let. Now, the let would be exactly this point here. So that's a let. And this is where you can trade the mitigation after the let. Does that make sense? So like that is somewhat of a mitigation entry. I'm not too fussed on that one because you would already have this entry here to be taken, but to take that one based on the consecutive mitigation isn't additionally confirmed. Like it is at let, don't get me wrong, but I would rather then wait for the mitigation after where it gives a clean reaction that price will now continue as opposed to then like go choppy like such. So when I get the reaction like this, it's nicer for me to then take this. So let's see what that will be. A 1M let, of course. We can take the mitigation after this initial let as mentioned. And that will be exactly that point there. Now, again, remember the risk to reward aspect of this. It's okay. It's not amazing, but it's okay. But like I said, I would prefer the first one anyways. When it comes to a pullback, you don't want to take too many pullback like entries, I would say, depending on the time frame. When it's a 1M, ideally 1, maybe 2 if it's extra nice. So let's clear the drawings again. So we get a lovely reaction, as you can see. Now we are indeed approaching the sell POI. So what does that mean? We should inevitably close at this point here. So at this point, your buys should be now closed. And upon the reversal, we should know that this point here will be a smart money trap or an FFS. And this is how you build a picture of understanding. It's using the momentum mitigation. Like, honestly, that is so, so important to avoid taking random POIs. It's the matter of what happened first that does this now make sense. This is why these are not smart money traps. The ones, well, marking X's again, but these mitigations are not smart money traps because we're taking them to lead towards the fractal target. Now, again, that's ping-ponging on the pullback trades, but again, don't take them. If you don't like them, don't take them. It's fine because you know you need to close them. Don't get greedy, close them. Like it's so key to do that. Now we get our perfect mitigation. It's kind of traded in there a little bit. That's fine, but take the sells. You get a lovely reaction. Now, pro trend being the second main target as price has actually completed the target. So now we are trading away from the inducement. What we can also see, if you can notice, the purple line is indeed London close. So it may get a little bit choppy at this stage. So intraday volatility is low, so we can close the trade here at the imbalance. Now, the only reason why that was okay now to close is purely because of the timing aspect of London close. Otherwise, what the chances of the next day or going into Asia, I'm 99% sure that will get induced. So yeah, either way, it doesn't matter. You close, not based on a mitigation, but based on a target for yourselves. And that's just unfortunate because it is end of day. However, for the rest of the day, we had some really nice trades. How many was it? It was quite a few as ping pong trades. So let's look at an overview of the day with lit opportunities. So I'm going to pull out the plain 1M chart over here. And you can see it actually kind of looks like a mess. This is why you should ask a retail trader to make sense of this. But looking at the overview, from what I can remember, is we had our sells as pullbacks. I believe it was two sells over there. We took 2 buys over here. We took 2 buys over here upon a pullback as we were waiting for a reaction. And the pro trend was the sells over here. But timing, of course, sufficed to why we then target there as TP. So quite a lot of trades, even seeing how they actually traded kind of in a weird, I would say, range around there, as opposed to Asia being all the way down there. Frankfurt did his thing over here, but that's pretty nice. How many trades would that be? That's 2 over here, 4, 5, 6, 7 trades, 7 ping pong trades on a day that looks like this. Like, it wouldn't make sense to a retail trader. It really is that simple. So yeah, I hope you guys enjoyed that. Do let me know if you have any questions on this module, and I'll catch you up in the week 5 Discord.